lost my mind. I know what they think is not who we are. Or read my mind. What you'll find is I need you more than ever before. Breathe in, breathe out. Without your love, I feel like I would drown. Breathe in, breathe out. Now you're away, I'm slowly going down. Go down, 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 down. Go down, 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 down. In my head, I hear you call my name in that voice that I'm longing for. I can see your smile when I close my eyes. All I have is my memory. Breathe in, breathe out. Without your love, I feel like I would drown. Breathe in, breathe out. Now you're away, I'm slowly going down. Over the hills, through water streams, I would walk to you. I would walk to you. Over the hills, through water streams, I would walk.
No. Okay, there we go. What's up? What's up? How's everybody doing? Just give me a sound check, and then we'll get it started. Just give me a sound check for the mic and the background noise. You're wrecked. Just sound check. Good to go. Background noise is all right. All good, all good. So, what's up, everybody? Good afternoon. It's afternoon, at least my time, Tuesday. Let me just say hi to everybody. Cornholio, what's up? Al Gould, Jimmy Trendricks, what's up, buddy? Tom, Chupracosa. Oh, might have massacred the pronunciation of that one. Darian, Asgard, MG, Elizabeth, how are you? Prejat. Okay. Cool. All right. So how's everybody doing? It's been a rough morning, right? Equities and crypto both getting pretty beat up. But we're going to stream. We're going to talk about BTC. We'll talk about alts, take questions. And just as a reminder, so get all the good stuff out of the way first. First of all, thank you for tuning into the stream. Myself and my partner, Josh Rager, we're the co-founders of BlockRoots, and this is a BlockRoots YouTube channel. If you're not subscribed, if you're not already subscribed, make sure that you hit the subscribe button. I'm going to be streaming now consistently every Tuesday and Thursday until things pick up again. And then when things pick up again, I won't fall off the radar. I'll still stream, but yeah, when things pick up, it'll be less. There'll be less time to go around. Hopefully, right? I mean, 2020 and 2021 were pretty exhausting. But needless to say, right now, market conditions are not really conducive for much trading. I'm not that interested in trading them as much as I was, previously. There's a bunch of reasons why, obviously, right? I mean, it's just been kind of choppy conditions. Been good range. There's been good ranges to trade, but liquidity has kind of dried up, and it makes you have to. I mean, you don't have to, but you should size down. And I think it's just a good time to step away from the screens and do things outside of crypto, right? And save our energy and bring our attention and focus back when conditions permit, or rather when they're just somewhat improved. Not to say that you can't trade these conditions, but it's definitely not as exciting. And if you're not someone who can adapt, I'm sure plenty of people can sort of attest to this. It's been very difficult to trade. So again, just before we get started, remember, none of this is financial advice. It's strictly for entertainment purposes only. I'm going to try to keep it entertaining. If you're interested in any of the platforms that I use, or that I think that rather are good and that I recommend, there are links down below in the description. If you're not already subscribed, again, make sure that you hit the subscribe button. We'll be as part of doing videos more and more moving forward, we will also be getting back to doing some more of those giveaways that you guys like. All right, so we'll get into it. The screen that you're looking at right now is this is Crypto Watch. It was a setup that I was using for like a month, and then I don't know. I found that I still preferred Agri trades over Crypto Watch. But if any of you are interested, I can share my template. Just for this sort of camera waiting screen, I have the FTX and the Binance tapes up as well. All right, let's get into it. So let's change the screen. Hopefully this transitions well, main. All right, so first and foremost, you guys know that we've been partners with Phemex now for quite some time. Can't even think of how long we've been partners with them now. But since they've been around, or close to around the time that they came into the scene, phenomenal trading platform, still no KYC, right? So if you want to go onto the platform and just sign up with an email, you're not required to KYC, and you can still withdraw up to 2 BTC a day. It has 200 pairs, spot markets and futures markets, and also allows you to generate yield on any stable coins that you have parked on the platform. So be sure to check them out. The link is Phemex.trade. Just change this up. Get out of there. All right, first and foremost, how's everybody feeling about where we sit right now? Let's go through the chat. I definitely just started the stream off pretty rusty. I need another cup of coffee. I might have to take a break and get another cup of coffee. This morning I woke up with, I don't know, kind of like, some of those days you just wake up in a fog. Can't tell if it's that I haven't had enough coffee or, it's just one of those days. I didn't get a really great night of sleep, so that could be it. All right, so let me just go through. How are we feeling? Bullish, bearish? I mean, at this point, this is probably pretty redundant. Oh yeah, thanks, man. I mean, not really a new setup, bang. Yeah, I didn't realize I was streaming the same time as Essie. That's my mistake. I scheduled this stream yesterday, and I was thinking of that, honestly. I was thinking, okay, if I'm going to schedule a stream, I do want to avoid scheduling it during someone else's time, and for some reason he just kind of slipped outside of my thinking. And I remember like a week ago, I think it was Trader Magus and maybe Cold Blooded Chiller, and Magus had realized that he had scheduled accidentally at the same time slot as Schiller, and they rescheduled. But I'm sorry, I didn't realize that. If you watch SE stream, this will be recorded. It's not like you're gonna miss out by not being here live unless you intend on asking any questions. But you could always ask your questions and leave them in the chat. You've been sick. Sorry to hear that, man. Yeah, I just haven't been trading as much. Not to say I haven't been trading, but I'm really only trying to be around for, as I've said before, sort of the A+ setups. it's just, I feel like these kind of conditions, it's a waste of time and effort to even really dedicate to the market. 10K run in ice bathtub, yeah. That's one thing. I didn't take a cold shower this morning. All right, cool. All right, so I just wanted to go through the chat real quick. Okay, so, you know, first things first. I mean, you could take a look at the entire market and see, you know, basically gainers and losers today. The last 24 hours, if you could separate it by hour, it's more or less pretty much the same. It doesn't really mean anything. I think right now it's clear what kind of, you know, regime or what kind of environment we're in, rather. Regime is obviously a little bit more longer term, but we're in a situation, we're in an environment where the S&P is dictating, you know, majority of the price action for BTC. Whether you're looking at like the S&P or the NASDAQ, a little bit more futures heavy, obviously, those higher beta equity plays, you know, and obviously crypto sort of trades like, as I've said in the past, crypto trades sort of like a tech stock, not like any kind of individual tech stock, but in just the sense that it's a higher beta play with respect to benchmarks and indices, and you know, a little bit obviously further out the risk curve. Even though for the longest time, you know, most people were really concentrated in tech with really no consideration about where that sits on the risk curve, and I guess rather consideration for balancing out and being, I guess, a little bit less concentrated in some of the riskier areas of the market. But that's, you know, it's kind of silly to say that to a crypto stream, because most of us are primarily focused on this market, and this market as a whole is, you know, a lot more volatile than legacy markets. This is, as a whole, higher beta with respect to stocks. Even though I'm sure, you know, you could probably calculate the beta of BTC and see that it trades more in line with, you know, maybe a few individual equities, you know, found in the stock market. So anyway, the S&P right now, the NASDAQ, the Russell, whatever you want to look at, BTC has a really high degree of correlation to it. So if we were to look at, you know, for example, the BTC chart, and we're just going to place, you know, the S&P on this, you'd see that pretty much they're moving lock and step, right? Now, the thing that has been, I guess, somewhat apparent this morning is that on the way down, when the S&P has had, you know, small kickbacks, crypto, Bitcoin rather, has been actually less responsive. So it's definitely not something you want to see. You want to see that with Bitcoin and the correlation as a whole, you want to see that there's more upside capture. When the S&P is moving up, you want to see that BTC is capturing more upside, and that it's not the opposite case, which it happens to be this morning. So moving down, right, and then when the S&P bounces, not really following as tightly as we would like to see. So the S&P right now, just because I think that this is important to understand, because I mentioned this the other day. You know, I mentioned if we lose 4360, you know, expect a significant amount of downside in BTC. You know, that was on the 22nd of April. If we go back on to the 22nd of April, that was right back here. Let's go down to lower time frames. Here's your 22nd of April. This is where the S&P lost 4360. And needless to say, BTC has continued down as well, right? So has not been able to hold any levels for really any significant amount of time. So just to get over this really quickly, I mean, the most obvious level on this chart, the lows of 4163 region. Excuse me, I have the hiccups. This is definitely an area where if the S&P were to lose this, and I'm not saying that that's, you know, something to expect or that I necessarily anticipate, but the point is, if the S&P were to lose that, and we're looking at E-mini futures right now, and I know this chart looks a little noisy, so we'll go to this chart. If the S&P were to lose that low, right, so this is this region right here, it would, you know, be the, you know, quote unquote lights out situation for BTC. Rather, we'd be in a lights out situation. I can't imagine that crypto would not catch a significant haircut across the board if we were to lose, this year's lows in stocks. And we're in a pretty important part of earnings season. We have Google, we have Apple, and I think it goes without saying that if those were to lose, I was about to say if those pairs, they are pairs, but it's not normally how we refer to them. I definitely have like a little bit of brain fog right now. If earnings were to miss for Apple, just to give you an example, Apple is 6-7% weighting of the index. That would be, I don't want to use the word catastrophic, but that'd be very bad, right? Considering that is the largest stock by weight in the S&P. And I've made the joke in the past that the S&P really is, if not being held up, being largely helped by Apple performing exceptionally well, right, recently. So moving along, just looking at BTC on the high time frames. If we go, there's a setup on the monthly. I don't really look at the monthly too often, but this is a very clean structure so far. Our monthly levels have been very significant for the last year. If we just zoom out right now, you can see that the monthly lowest close going back to June of last year, and then the lowest close of this year, obviously being more local, is right around the range lows of this entire structure. And again, we've been within a range for the last, what are we going on, over a year now? I mean, if we go all the way back to the beginning of this, just over a year. But more importantly than that, we have an inside month setup. So we'll just connect this. So high and low. Basically it's not exactly set up yet. Because an inside month setup, we're at the end of the month, so I have to mention that. This was an inside month setup. One sec, change the ink. This was an inside month, right? Because this month ended up finishing inside of this month, right? So once we closed out, that high and that low were the triggers for an inside month setup. Same idea as inside day, inside week, and you could extend it down on the lower time frames as well, but it's a little bit less reliable at that point. You have less flows behind the move, but the break of the high, the break of the low usually leads to the next sticky area, or if you're going sort of by a textbook case, it would be the prior month's high or prior month's low. So we don't have this completed yet, but I think you could expect that given that we have been ranging so cleanly, that if we were to break, right, and again, meaning that there's 4 days left in the month, if we were to close this out right here, the setup would be tighter, right? So it would be like, for example, if this ultimately stayed the low, this would be the trigger, and then we would look to play to this low, but I think at that point you'd be, breaking much lower. But right now, if we were to lose last month's low, I think it just takes you back down to the lows of this range. You can see that overall in the last, 4 months, you can see where we've spent the majority of our time. It's pretty tight. It's a, what's going on? The chat is, someone saying, let this man have his time. I got to catch up to what's going on in the chat. But the idea is that there looks to be like a high time frame break from balance setup taking place. Going down to the weekly structure, you can see that price spent a significant amount of time hanging out down at these lows. We're right back down at the low of that structure. If you look at this as a whole, we've really been in a range for the entire quarter. So I think now that we've lost the midpoint of this range, I think that we're ultimately looking at, my bias is that we're going to come visit down, this 37K region. And that's where I would ultimately look for, signs of absorption or signs of acceptance if we were to accept below these lows, clean accept below these lows, I think again you're just looking back at the higher time frame range lows down here, right? Locally, so if we just look at what's taking place today, yesterday's low, we have a sort of a double. Yesterday was I mean, you could kind of call it a double distribution. Let me go back to this other chart and I'll place the profiles on here. So you have balance up here, one-sided, impulsive, imbalanced activity, but coming from these lows. Here's your lows of yesterday. We balanced out briefly, accepted back within this sort of single print. Wasn't entirely single prints, but it's more or less a gap. And now we're back down at yesterday's lows. I would not anticipate, and I rather would not look for any kind of long opportunity until we take yesterday's lows. So it's possible that this might be, considering it's such a one-sided move down, even though I think it's largely dictated by equities, it's possible that this might leave us with a nice long setup. But I very much doubt that would be a case where we would have equal lows. So if anything, you would want to see that price takes yesterday's lows, and then maybe we'll look for maybe a bottoming out pattern on the low time frame. And that might be taking place right now, right? So we'll see what happens as we break below this structure. Let's see. My price is dropping without much of a response. We'll see. Let me just go through the chat real quick because it seems like maybe I missed something and someone asked a question. So it looks like we just ran stops from yesterday, but no major response yet. Yeah, so Zane, that's right. I said this a while ago. I said that when institutional players came, it distorted lower time frame price action. Yeah, Tom, I do. To your question about BTC and ETH. Yeah, I've said it many times before. I have multi-sig for the reason being that I don't want to touch a certain amount. Oh, go to the topic. That's what Brad is saying. Oh, my bad. Whatever, dude. I have a headache today. I know when I'm foggy, and I feel like when I'm foggy and it's obvious, I'm not gonna. Otherwise, you guys are gonna sit on the other side of the stream thinking I'm like down in booze over here or stoned because there's some times that I'm clearly just on the ball. And today I'm just in the weeds. I mean, my bias there's streaming during conditions like this kind of sucks because nothing has really changed. And I think it's good to do sort of AMAs during these kind of conditions. Nothing has really changed. I think that there's high odds that we end up visiting the lows of this structure. I just can't imagine that, for example, anyone who was thinking that we were developing maybe a higher time frame bottom and is looking to much higher prices, I think is just delusional. I think one thing that I'm noticing a lot lately is like we're stuck within a range with very obvious and immediate levels that we have to deal with, yet people are still sort of looking 3-4 levels out as for targets, right? I think that in these kind of conditions you have to free yourself of that kind of thinking. It's very unlikely that what has been taking place, these choppy sort of ranging crabby conditions, it's very unlikely that they're going to change without some kind of major catalyst, right? Without some kind of shock to the market. So it's just more likely that if we're stuck within a range, that your best bet is anticipating that we're going to be staying within that range and playing it from level to level locally. Right? All we're really doing is we are seeing periods where we have a sharp pickup in activity. So for example, and one more recently too, as you'll notice. So we'll have a sharp pickup in activity. Where am I looking? Oh, we're right over here. Open interest going up, right? Open interest going up, and then right here is what I was just talking about more locally. And then all we're doing is really squeezing those positions out, right? Squeezing that new risk out, and then continuing what we have been doing, which is more or less just moving sideways. And then it's like waiting for another period where you catch, or capture a significant amount of the market offsides or committed, and then squeezing them out. And the point of that is that we're not having any follow through, right? So for example, this entire structure you could see is primarily squeeze driven, right? So from these lows, this entire structure moving down, you had open interest coming up, right? From these lows, you move up and you can see that open interest went down, right? So a good amount of this is, within the structure, anyone who's long is clearly taking profit, but it's also primarily it's, shorts closing out. And then what happens is once we get to the top, you see more or less this sort of listless price action, and there's no new risk coming in behind the move. There's no additional funds, no additional buying, no strength in the spot market or any of that. It doesn't mean that this entire structure can't bottom out in this region, but it doesn't mean that it has to do that anytime soon either, right? When we do have a bottom, it's very unlikely that it's going to just grind its way up. It's more likely that your bottom is so violent that it nukes through any local upper levels that you had in mind that should have acted sticky to begin with, right? And then you're forced to consider whether or not you should be buying higher. And at that point, a lot of times, that's the cost of doing business, is buying higher. But this kind of grindy price action that we have here, and what I mean by that is you'd be more certain of a bottom if we did something where we spiked down and then we ripped all the way up and now we're back above these local highs, right? Than if we were to just kind of grind our way up. So it's more likely if you nuke out upper levels that the move is strong than if you are constantly getting rejected from local small levels, which have been able to reject price thus far. So if it's bullish, it's going to look bullish. It's not going to sort of peter out. For last night, I said I've seen this set up a ton of times, where you have a structure like this. It's balanced out, right? Multi-day composite. Breaks down, fails to continue, so you have a retest here, but fails to continue, and instead you get this trap that rips up. I've seen this setup happen countless times, and what you're looking for is, if this is really strong, the top side of this range should act as support. All right, so last night I said look to buy a pullback if you see signs of absorption at 40. I said 40 because, one, it's likely that you revisit any kind of, if we look at this structure, you can see that there is no real single prints, but it's likely that you revisit a gap, right? And this is as close as you're going to get to a gap in this daily structure on the way up. On the way up, we only left single prints right here. Okay, just a very brief period of, the market was there for less than 1 30-minute rotation on a TPO chart. But the point is, this is a good area usually to buy a dip. The prior composite range high, right? If we were to spill into this, see signs of absorption, see signs of development in this region, this is a good area to long for at least continuation back up to the highs. And instead this morning, I mean, look at this. Sort of looks like someone was just T-wopping out. Right? If we look at this on a 1-minute chart, look how perfect this rate of descent was. Not perfect, but you get the idea, right? On a 1-minute chart, on a 5-minute chart, we never made a higher low. Right? Constantly lower highs and lower lows all the way down. So one of the things you would look for if you're looking for, just from a price action standpoint, it was you would want to see signs of development at a low, right? If you're looking to buy support, that you would also, couple flow with ideally some kind of evidence of absorption if you're looking at order flow. And there's not even anything that begins to give us that down here. You could take lower time frame scalps. Of course, if you're a lower time frame trader, you could have scalped this on the way down a handful of times. But in terms of development, there has been nothing yet. Development would be, let's see, if we just went by this local high and this local low. High, let's say we took this low and then we started trading back above and putting in market structure even locally on the low time frames. But instead, all the way down, we haven't been able to do that. It almost looked like we were doing that back here. Price continued to roll over. So this has just been very one-sided all the way down. But right now into this low, I mean, we could be setting up another squeeze because ultimately, again, one of the things we just pointed out is look what we have into this region right now in terms of open interest. And if we see who this is from, these are just, both of these are just from Binance and FTX. So this is good amount on Binance and almost equal amount, not equal, but the same rate of, the same rate of change, right? The same intensity almost on both exchanges. I think what you'll find in terms of OI, just a generalization, is that when it's aggressive short OI and it's mostly aggro shorts, the velocity of change is much more noticeable when it's from the short side than if it's from the long side. The long, what tends to be derived from aggressive longs is this sort of slow grind or slow pickup in open interest. This is a market that mostly wants a long, right? The open interest spikes that are, near vertical on downward price action, it's very rare that you would say that this is, one, you have the hint that we've moved down and throughout the duration of this move, this has moved up. So that's sort of a very obvious tell. But even if the market wasn't moving down this violently, if we see open interest really just begin to pick up near vertically over any short span of time, especially obviously when the market is moving down, it's usually the case that is, some kind of panic seller, whether they're a hedger or whether they're, shorting. Whereas when you have a slow sort of buildup of open interest, it's usually the case that it's, a majority of it is aggressive long buildup. Now that's very general, but in my experience, that's something that I've noticed. So, I mean, if we look at this now, so go to, hold on one sec. Now this structure is, there's a case to be made for opening up a long. Right, if we get balanced out at this low, I mean, it's ugly as hell, right? Again, I said this is sort of like a double distribution, but if we balanced out here, this would be a double distribution. You have a gap, you have a brief period of bounce, transition down, and we're back within a prior value area. Now, right now we're outside of it, but if we start trading back above something like, 80, 38.4, then you have a case for this possibly beginning to balance out. And there's some decent long opportunities that might set up. So, I mean, this is a good low to focus on right now because of the fact that down at this low across all exchanges, we've seen a very sharp pickup in open interest. And it makes sense because if you have to just consider the psychology of people trading, right? We're coming back, this was a bullish move off of the low. Right, so let me go back to my other screen. Maybe I'm sick because I have the sniffles too. And I have like a brain fog that, see? Brain frog. I have a brain frog. Strong move off of the low. Oh, this has to be some kind of bottoming structure. If we're holding 40, you're looking, like I said, 41.4, what did I say, 42.7. So when something like this unwinds, I mean, the snap decision is, oh, this has to be much more bearish, obviously, right? But instead, we came vertically into a level, and now you might have just had we could have very well just trapped a ton of shorts based on that thinking. I mean, a lot of the times, if you have a candle that is a bearish engulfing candle or a bullish engulfing candle, that on its own is usually good for some kind of intraday bias for the following day. At least for whether you should be buying a pullback or selling a rally. In this case being, close below yesterday's low, you're looking to sell the first rally for continuation down. I mean, at that point, it's much more obvious. So if we don't trade back within yesterday's value, it's much more likely that this, trending day balance, and this is now acceptance, is leading to these lows. I mean, it's fairly straightforward. Yeah, I don't know. I have like a congestion, headache. I don't know. Let's take a look at funding. It could be also yesterday I was staining wood outside. I might have not had enough ventilation. I was outside, but I might have given myself brain damage. Yeah, the ES is so that's one thing. If it's dangerous right now to look at BTC in isolation. I mean, ES is basically has the same setup as Bitcoin right now, right? If I'll get rid of this weekly profile. Yesterday's value area, move up, accepted back within balance. It looks like we've taken yesterday's low, and potentially, again, we have the same setup where maybe we'll get a little bit more sideways action out of this. But if the ES was to break down, there's no way that Bitcoin isn't breaking down, right? So I mean, that's why, like I was trying to say earlier, like it's not like I don't want to trade because it's not, the conditions are tough, right? But it's also because it's not as fun to trade when there's one thing that's moving the entire all markets around. Because for example, we could look at a setup in BTC and we could see this and on its own, you could make a strong case for getting long down here, right? Depending on what develops. But then there's always that ever-present risk that regardless of what develops here, here's my point. If brain damage is, I definitely have some brain damage. Let's say we had a really great, absorption case to be made, right? Delta down here, very negative, increasingly negative, volume greater, but less progress in price action. Again, some sort of basic signs of absorption. Let's say you had that, or some kind of anomalistic case where it's like a ridiculous amount of volume, sort of like what we have right now, where you have a really sharp increase in open interest. That on its own, that's great, but those traps might not even lead to anything if even if they set up and BTC moves up, you know, a little bit, and you have the setup based on price action also, that setup might be completely negated. It could be like an A+ setup just because someone comes in to the S&P and sells like, you know, a couple hundred lots, right? Or, you know, sells, you know, a significant amount and takes us lower in the S&P, and then Bitcoin's sort of A+ setup has just been, you know, taken off the table. But that is, I keep saying, you know, some of you don't know. That's why it's really important. I guess this is why it's really important to understand variance, because you can have the, you know, great hand in poker and still lose, right? You can have a great setup trading, and what you'll see is you'll have many great setups and you'll still lose. So, but it's just not as it's not as exciting to trade. You have wallet damage, yeah. Staining wood, such a dad. I'm not a dad yet, but so you know how I love to, since, well, market's boring. So quick story, bought a really nice dining room set for the outdoors. I just got finally my furniture for outdoors. I had like this shitty set in the interim, but got a really nice couch set. But the big dining room table, every year, you know, you retreat it, you cover it, blah, 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 stain it, wax it, whatever it was. You got to first put this stripper on, and I just put it on, and it kind of destroyed the table. And I didn't do anything abnormal with it, put it on the way you're supposed to, kind of destroyed the table. So now I'm in a position where I had to completely strip the, you know, the finish off of it with something else. Now I have to sand it down, you know, do it all over again. So that was my day yesterday. Yeah, what's up, Matt? That's a great point. It's kind of one of those days where if we could get to close, right, if we could get to stocks close, right, regular trading hours, maybe we'll have some relief. I mean, this could be it developing right here. You know, good signs right now, just to go over these. We have excess at the low. We have better excess than we did yesterday. So that's good, right? So we have a tail. So we have these, you know, this would be single prints if it was within a structure, but it's a buying tail at the lows, short covering, whatever's, you know, it's not, I don't think we're in a situation where it's a ton of spot buying. Again, it's a derivative-led market. So short covering at the lows, creating this buying tail, took yesterday's low, so decent, right? But it all depends on the legacy correlation right now. Someone is at my door, guys. Give me 1 second. I'll be right back with you. Sorry about that, guys. Let me get back. Okay, apologies. Fucking solar guys. Uh, I heard I get an alert on my phone when someone's at my door, and I saw this guy like 2 weeks ago just hanging out at my front door, and I was in my office. I was watching on my camera, and I knew he was trying to sell me something, and I'm way too nice to everybody who tries to sell me something, and I end up like buying everything because I just feel like if young kids just walking around, neighborhoods trying to like sign people up for things. But I feel bad. But comes back. It's like, dude, I'm doing something right now. Is your wife gonna be home? Yes, but I handle everything. Okay, when can I come back? Okay, buddy. Give me a second. Anyway. You guys have any questions? Sorry, I'm out of it during the stream. I need to take my vitamins. But I think, where do we leave off? On this setup being normally a decent setup, right? I mean, it's not like every break in so one thing that has been the case is the market hasn't been looking to trend or hasn't been fast to trend. So it's not necessarily the case that breaks in market structure lead to, I guess, an amount of downside or upside that we would normally anticipate. And I think the one thing you could see right away is if we look back, like for example, just looking at these lows and this break, it's happened countless times before where the market has, and then multiple times over continued to recover. So I think it's just a reminder to sort of play it local. Okay, yeah, let's look at some other stuff because Bitcoin is really boring. No, I can't deny. My brother used to work for a company a long time ago, and I remember when he would complain about going door to door. He was a really good salesman, but it was a job for young kids, and I always think of my little brother when kids come to my door. So then I end up buying like everything that you don't need. I mean, mind you, it ends up working out because we just moved. So a lot of this stuff are things that I would ultimately decide on anyway, like, new heating company, oil company, all that stuff. This guy is just a solar guy, and I don't want solar panels on my house, unless I could hide them somewhere. Nothing against like clean energy, but solar panels on the top of houses just takes away from all of the aesthetic. All right, so let's look at some other pairs. This chart is the 15-minute chart right here. All right, so yeah, vitamin D and zinc. Yeah, I normally take Thorn Research AM and PM, and it's fortified with a ton of stuff. It's one of those days today. I'm also old, so you'll get used to it too. All right, so Ape. And I could always tell when I'm out of it because I have a lot of like filler, like a lot of spacing. Is an example, but or I'll say like, well, like, or so, and you guys are watching the stream because some of you don't, but I'm just kind of carrying on too quickly. All right, so Ape. The first levels that I would mark off for this period, just get an idea of the weekly range. And so far, this has been the meme coin, the flavor of the week. So you have your retest, the top side of the structure, holds on the daily, trend is intact on the way up. So, I mean, this is from a structural standpoint, Ape doesn't look like anything really has changed. I don't think, though, this moves independent of the market if the market was to continue to move much further down. But on the low time frames, it doesn't look bad, right? We continue to hold prior levels, retesting these prior highs now. If I was going to expect something, I would expect that, like all things that get really popular and have their run, they usually need some kind of blow off. So I wouldn't go about shorting this. So you either wait for some kind of retest back down to the top side of the structure, grabs those lows right around here, or continue to buy the dip and wait for this to blow off. I mean, if we start closing back within yesterday, if we don't close outside of yesterday's range, or excuse me, if we close the week, something like this, actually that's my mistake, because I was actually carrying on with that, but for a second I thought I was looking at the daily chart. That's not that big of a deal. I mean, in general, you don't want to see that. Just a very simple way to look at things. If a pair is going to continue with momentum, you don't want to see that it's retracing half of the prior day's structure. So we're right at that point. And again, I don't really use fibs too much, but it's just a simple way of thinking about it. So yesterday's range, and then we're back below the 50 point. 618 is usually, I think that's like one of the more common areas to look just for crypto in general, but you want to see continued progress upward. I don't know a whole lot about Ape. I haven't traded Ape. These candles are ATR candles. So they're based on the time frame, they're a multiple of ATR. So things that stand out, candles that stand out, that are like multi-sigma candles, get highlighted. Yeah, everything right now is just pretty shit. I was long near last night, and then I closed it out like 25 cents later. So this is completely unraveled now, but I think I got long right around here, and then closed out at 90, was it 95 or 96? I posted it today. I mean, the idea was pretty simple. If we were going to hold with BTC, considering near strength recently, I would anticipate that if we were to accept back within the lows of this structure, that you're at least taking these highs, or this more local high. Again, just focusing on local levels first. But right now, it's clearly struggling with everybody else. I think BTC might bounce right here, just temporarily. No, and someone said drum and bass about this music. I'm just always trying to find new stream beats that are not have no copyright issues. I mean, honestly, if looking at the structure right now, if you're looking for it, let's say you're to long these lows, or you're longing development down here. To be honest, I personally wouldn't be looking more than outside of the next sticky area. As I always say this, I mean, in these conditions especially. So if I'm not thinking that I'm buying like a bottom for a swing, I'm looking at the meaty point of today, right? Or the meaty point of yesterday, so yesterday's point of control, and it lines up nicely with this single print today. So something like 39 for a first rejection. And then maybe we go on and develop more, and then your levels are within the gaps. So really, I mean, it's yesterday's value area, and the significant levels within yesterday's value area that actually line up nicely with today's significant structural levels. So single print lines up with yesterday's point of control, and then the gap, the single print here, lines up with yesterday's value area high. So my point is, these lows down here from a risk reward standpoint are not bad for developing a long. We're looking for a long, but this would be TP1 and this would be TP2 from an intraday standpoint. And what I was saying earlier is what everybody's doing right now is they're getting long here and talking about this up here already. Or, this is not necessarily the case right now, but my point is it's like a lack of consideration for all the levels between. And you know that price is choppy and that it hasn't been trending and it's been ranging, so why expect it to, on your time, start to trend? See what level right now is actually acting as resistance. So on the way down, this monthly close acted as support, and right now it's acting as resistance. So that level right there. Right here. Now on an intraday basis, I don't think that that's that big of a deal. Like I think you could still look, just because you're below this monthly level. It's clear, we have 4 days left. It shouldn't necessarily dictate if you see a good setup down here whether or not it's going to work out. CRV. What's going on with CRV? Let me turn these candles off because it's messing with the scaling. And it's within a range right now for the last 1, 2, 3, 4, 5, 6, 7, 8. It's going on the beginning of the quarter. Same thing as BTC, but looks weaker. 275. I mean, I don't know about narratives right now. I know about the Tron development, but I don't know about longing narratives right now. I think it's a really bad time for that. So I think that right now, considering we're a very technically driven market, not a narrative driven market, it's a news flow driven market, it's a technical market, and I guess you could say news flow is narrative, but I would specify like fundamental narrative for individual pairs. I don't think is a strong case to get behind. There's only a certain amount of money right now that's flowing between pairs that are strong for very brief periods of time. Once it's done, it moves on, and it's not extending across the market. So I'd be very careful about getting in position for things that do not look, even remotely strong. I don't know anything about Woo. I mean, I'm the lowest I would expect BTC to go. It's tough. We're still within a range, so it would not be abnormal for us to revisit these lows. I think it would possibly set up for another really good swing long opportunity. There's no real reason why if we visit these lows we have to continue to go down, and we don't continue to just do this sideways for a long time. Right? This was a much more significant move than the past bull market. So a lot more participants, there's a lot more money going around. Why can't this continue on much longer than the last one? Not saying this is going to happen, but the point is, I would not just like blindly sell support, blindly long resistance, because I think that it's entirely possible you just continue to range much longer. If we broke below these lows, there's a small structure down here, small structure within 24, but the honest truth is like the most meaty area on this chart is honestly all the way down here. No one wants to hear that though, right? I mean, that implies you fell back below the prior all-time high. There's no rule that says you can't do that. It's just historically it hasn't done that, but for something that's young, it makes sense for things to break, right? Rules to break. And for what has been consistent to not necessarily continue. If we were to lose this low, yeah, I think you have to look 25 to 20. But I don't think, my point is, like, I don't really dedicate much headspace to thinking about levels outside of major levels, you know? So I don't think about that. It's just like that's where we could go if we, and this is a very flow-driven market, very technically driven market. If a major weekly level breaks, this is a major contextual level, there's going to be a lot of panic selling. So I think initially it'd be a good opportunity for longs to take advantage of. But if you were to accept below here, right, if we're closing below here, if we're closing and rejecting below these lows, then yeah, you have to start looking lower. Like it doesn't make sense for you to still hang on to a little bit of bearish, thread left if we're closing below these lows. I think until we have a significant change in market structure below these lows or development below there, I think that this low, if it came to it, if we're back down around 30, I think it's a buy the dip opportunity, honestly. Because who says, again, that we can't be, who says that in the beginning of 2023 we can't be actually, something like this? On the high time frame, the structure looks like it still has a lot of energy that it could work out, right? High, higher low so far, higher high. Why can't this do something like this, honestly? Like it just, I wouldn't get too locked into one outcome. Doge. Yeah, not necessarily a good thing, right? So yesterday was a good example of how inefficient this market is and why it's so great to trade. Because you had a move that, for example, move started up to this point, it was basically understood that Elon was buying Twitter, right? It was understood that he was buying Twitter. It was more or less known, right? They were just saying that it would be announced like later in the day after stocks closed. More or less known though. And then once it was announced, price ended up popping up. Another, what was this? Another, double digits %. So in a very efficient market, the market would have at this point, at that point, it would have been probably have been more priced in. But this, this is completely retracing, which is kind of more or less what has been the status quo for Doge for the last few months. So again, like what has been the case, don't expect it to change until there's some kind of major change that's obvious. Why no new time all-time high? No, I think we're making an all-time high again. I just don't think it's going to be in the next couple months. I mean, this could be first leg, first long consolidation, second leg, another long consolidation. Maybe we have, maybe we're somewhere within this region. But the point is more sideways, possibly more movement towards the lows. We don't have we don't have like an accommodative environment right now for risk assets. So that's the first thing that you have to know. Ooh, wow. Breaking out of it's not there yet, but going all the way back to 2020, COVID, and then before that, 2016, that's at 103.8. Strong dollar, huh? Yeah, as you said, we could have a lot more of this. That's it. I mean, I would just find find a hobby, spend some time learning. It's not the time to go balls to the wall with capital and buy the dip. Famous last words, maybe, but I would rather buy higher with more confidence than, you know. But I think we're going to get relief down here. I mean, I don't see us just continuing lower yet. I think we get some kind of bounce. But look, nothing is out of reach right now in terms of, you know, performing really well. Worst trade I ever made. I mean, I made a lot of trades don't really stand out because I have like a lower to medium, higher to medium frequency approach. So I've had so many trades that no individual trade really stands out. But let me just think. There's been a couple like bad fat fingers, mistakes that have cost me money. Maybe over a decade ago, there was some really poor trades that I took in oil. I can't think of anything really off the top of my head, crypto-wise, because I tend to be more risk-averse, so I've paper-handed a lot of things and missed out on upside than been in a position where I've held through, like, ridiculous drawdown. And I think, you know, one that has obviously meant that I've left gains on the table, but what it has done is essentially keep me somewhat insulated from some of the larger drops we've had. I've had pretty strong lines in the sand up here at 49, up here at 50. Was it 55 or 52? I can't remember. That was right here, so 59, excuse me. You know, just idea of falling back within the range and, you know, not trying to hold everything through that. But I've taken significant losses, you know, in terms of dollar value that would probably make most people blush, but nothing that really stands out. I've had mistakes where I've hit the long button, hit the short button, been in position on the wrong side of a trade, not even realizing it. A good amount of rate hikes are priced in, but what isn't priced in is, you know, the amount of bonds that are going to be coming into the market. Probably going to wrap it up though, guys. I do have a kind of a headache right now and maybe a little bit of a fever. Apologies that on my first rescheduled stream, or stream that was scheduled with a line in the sand, or firm schedule, jeez, that I was a little bit foggy. But if you guys watch the other streams, you know that you could probably tell when I'm in between different states, or rather in different states. Thursday, hopefully, we'll be sharper and have a little bit more to talk about. Till then, I'm going to drink some water, get some fresh air, and I guess wait for this guy to come back that I told him to, you know, I told him to come back instead of just saying no to his face. All right, guys. Thank you. I appreciate it. So Thursday, same time, and then Friday, call in as well. Until then, stay safe, stay healthy. Take care.